So, if you bought silver last week thinking, hey, this is a safe bet, you might want to take a seat for this. And if you've got a gold loan, you could be sitting on a ticking time bomb. Oh, and if you're a trader, guess what? The government just made your life a whole lot more expensive. We're about to decode what just happened, breaking down a massive market correction, the new rules from Budget 2026, and a startup reality check that almost nobody is talking about.
Let's just start with the headline that probably made your jaw drop. A 35% crash in silver in a single day. I mean, to put that into perspective, that is the biggest one-day drop in 46 years. You know what they say? What goes up like a rocket comes down like a rock. And believe me, this is just the tip of the iceberg.
So the big question on everyone's mind is, what on earth just happened to your money, right? This isn't just about numbers blinking on a screen. This directly affects your loans, your investments, your plans for the future. And over the next few minutes, we are going to connect all the dots for you between this crazy market crash, the startup world, and the government's brand new budget.
All right, first, let's unpack that initial shockwave that just ripped through the markets. And this wasn't some tiny tremor, okay? This was a full-blown earthquake, especially for precious metals and, well, for investor confidence in general.
So, why the historic crash in silver? It's actually pretty simple. The bubble has burst. For weeks, we saw prices skyrocket to absolutely unreasonable highs, and it was driven almost entirely by hype, not by any real fundamental value. So what we're seeing now? It's the inevitable, and yeah, pretty painful market correction. Now you need to understand this term, margin call, because it's a huge hidden risk that's been building up. See, gold loans grew by a staggering 125% in 2025. Why? Because tons of people pledged their gold when prices were at an all-time high. But now that prices have crashed, banks can issue this margin call, demanding you either cough up more cash or put up more gold to cover the loss in value. It is a classic financial trap.
And it's not just regular folks feeling the heat. Look at this number. This is a massive red flag. Foreign institutional investors, the big overseas funds, they pulled a whopping 36,000 crore rupees out of Indian markets in January alone. The signal here is crystal clear. The big money is getting nervous, and it's running for safety. The whole era of easy money, yeah, that's officially on pause.
But you see, this market downturn isn't happening in a vacuum. No, it's directly tied to a harsh reality check that's hitting the startup world, where the rules of the game have just been completely rewritten.
So here it is. This is the crucial point. Profitability is the new god. Seriously, the days of celebrating some massive funding round for a company that's just burning through cash, they're over. Investors, especially in the public markets, they are so done with hype. They want to see cold, hard numbers and a clear path to actually making a profit.
And the warning signs, they are absolutely everywhere. That much-awaited boat IPO? Yeah, deferred, again, because the market just won't buy the story without seeing the numbers. And Misho, their losses exploded 13 times to 490 crore rupees right before they were planning to IPO. And this isn't just local. Even globally, tech giant NVIDIA reportedly hit the brakes on investing in OpenAI because of concerns about its business model. And this slide just brilliantly illustrates the two different worlds we're living in. On one side, you've got the cash burn model. I mean, Misho was reportedly spending 10 rupees just to earn 1 rupee in revenue. Look, that's not a business, that's a money-burning machine. But on the other side, you have a company like the Sold Store hitting 500 crore in revenue with a tiny 2 crore loss. This is the sustainable model that is winning right now. Okay, so right in the middle of all this chaos, the government has released its new playbook, the Union Budget for 2026. And you have to understand, this isn't just some boring document. It's a very clear signal of where money is going to be made and where the new risks are. Now, before we get into the winners and losers, we need to quickly understand this term, STT, or Securities Transaction Tax. All it is, really, is a small tax you pay every single time you buy or sell securities on the stock exchange. But even a tiny change here can have a really big impact.
Honestly, this is the best way to think about it. STT is basically like the cover charge you pay to get into a club. Well, the government just raised the price of entry, and they did it for a specific reason, to discourage all that crazy speculation happening in the high-risk futures and options market.
So let's look at the simple breakdown. On the winning side, a massive spending increase on infrastructure means sectors like cement and steel are probably going to do really well.
Travelers also win with a lower tax on foreign tour packages, and both IT and data centers and defense are getting huge budget boosts. So who are the losers? Well, traders in that high-risk F&O market now have to pay that higher STT cover charge. And in a bit of a surprising move, some buyers of sovereign gold bonds might now face taxes on their gains, which closes a loophole that a lot of people were using.
Okay, so we've seen the market crash, we've talked about the startup reality check, and we've gone through the government's new rules. The most important question now is, what do you do next? Let's talk about the path forward.
Here is a simple 3-step plan to think about. Step 1. Don't panic, sell your gold or silver. A correction is not an apocalypse, all right? The fundamental value hasn't just vanished overnight. Step 2. If you're a trader, you absolutely must recalculate your break-even points with this higher STT. Your old strategy might just not work anymore. And third, start watching the real companies, the ones in sectors the budget is actively pouring money into, like defense, railways, and data centers.
So here's the bottom line. The easy money days of 2024 and 2025, they are officially over. The new game is all about quality, it's about discipline, and it's about fundamentals. This market is rewarding reality, not hype. So the only question left to ask yourself is your portfolio ready for it?